Should you get a 25-year mortgage or a 30-year mortgage? What's going on, guys? My name is Jarrett White. I'm a mortgage broker for White Ridge Mortgage here in BC, Canada. And today we're going to talk about what to choose between a 25-year amortization or a 30-year amortization. And if you stick to the end, I think you're actually going to be quite shocked with what I have to say. Now, before we get into it, if I even provide the slightest bit of value, all I ask in return is that you hit that subscribe button, like this video, and ring the bell to be notified when other videos just like this come out. It really does go a long way in helping me grow this channel, and I would really appreciate it. So without further ado, let's dive on in. Before I can even talk about which one is better between a 25-year and a 30-year, you got to understand what an amortization actually is. So an amortization is basically the entire life of your mortgage. Here in Canada, we have terms and amortizations, whereas in the States, they just have their amortization. So in the States, you can actually get a mortgage locked in at a specific rate for 25 whole years or 30 years, whereas in Canada, we have terms that are typically between 1 and 5 years, and that's your contract basically stating what interest rate you're obtaining and the terms within that contract, and your amortization is the entire life of the mortgage. So as an example, you might have a 25-year amortization, but you might only have a 5-year term. That means you're stuck in that contract for 5 years, which outlines your interest rate, prepayment penalties, privileges, all that stuff. But the actual time it would take to pay off your entire loan is still 25 years. So at the end of your term, basically what would happen is you would renew your term into a different interest rate, potentially with the same bank or a different one, and you would have the choice to continue on with your amortization or to reset it back to where it was before. So as an example, if you had a 25-year amortization and a 5-year term, at the end of your 5-year term, you would actually have 20 years left in your amortization if you wanted to continue on that same schedule. Or you would have the option to stretch it back out, which would be restructuring your mortgage and therefore lowering your monthly payment. So if you're getting a mortgage here in Canada, you have a couple options. You can choose between a 25-year mortgage and a 30-year mortgage. Now, the only time a 30-year mortgage is not available to you is if you're putting less than 20% down. The reason why is anything with less than 20% down, you're required to get mortgage default insurance, and they simply just don't do 30-year amortizations. So therefore, if you're putting more than 20% down, you have the option to choose between either one of them. Now, which one should you actually choose? Well, I'm going to say it right now. I think a 30-year mortgage is by far the best option you could choose, and I'm going to outline exactly why I think that. Most people would think that a 25-year mortgage would be better because you're not paying as much interest over the life of your mortgage. Well, that's where people really misunderstand how this all works. There are 3 key reasons why I think a 30-year mortgage is the best option in almost 99% of the cases, and I'm going to explain exactly why right now. So reason number 1 is that when you take a 30-year amortization, your mortgage is stretched out over a longer period of time. And basically what that means is you're going to have a lower monthly payment. Now, yes, you would be paying more interest over the life of the mortgage. However, by having a lower monthly payment, you're actually eligible to borrow more for your mortgage. Now, the reason why this is the case is because lenders look at what's called a debt to income ratio. So they're looking at how much that mortgage payment plus all your other debts combined take up of your total income. All your debts combined can only be a total percentage of your income, so therefore having a larger mortgage payment means you're actually not eligible to borrow as much. So by taking a 30-year mortgage, that could literally be the difference from you getting into the property you want or not. Reason number 2 is more flexibility. What I mentioned before is yes, taking a 30-year mortgage, you'd be paying more over the entire life of your loan, but that's not always the case. So when you take a 25-year mortgage, you're going to have a minimum monthly payment and it's set at that amount. Now, when you take a 30-year mortgage, you're going to have a lower minimum monthly payment that's set at that amount. But what a lot of people don't understand is when you get a mortgage, you have what's called prepayment privileges that allow you to put extra towards your mortgage to pay it down faster if you want. So therefore, if you were to take a 30-year mortgage, you could actually increase that monthly payment and match what it would be at a 25-year mortgage. And essentially, you're turning your 30-year mortgage into a 25-year mortgage. The difference is, if things ever got tough, life got more expensive, you could take that extra payment away and go back to that payment you were making at a 30-year amortization. Whereas if you took the 25-year amortization, you're pretty much stuck with that payment. So for an example, say you have a $2,000 monthly payment with your 30-year amortization. versus a $2,400 a month payment if you took a 25-year amortization, you could literally just increase your payment of $2,000 all the way up to $2,400 right when you get your mortgage, and you essentially have the same amortization on both mortgages. However, if things ever got tough, with the 25-year amortization, you are stuck with that $2,400 a month payment. Whereas if you took the 30-year and you increased it, you could take that $400 back and only start paying $2,000 again if you wanted to. So essentially taking the 30-year mortgage just does give you a little bit more flexibility than being stuck with that higher payment. And number 3 that people really don't think about too often is that when we qualify you for a mortgage, we look at your minimum debt. So how much you're paying a month in your credit card, how much you're paying a month in your line of credit, what the minimum payment is on your mortgage. So down the road, if you ever wanted to buy an investment property, having a lower minimum monthly payment can actually help you qualify to borrow more. Therefore, it does make it easier for you to invest in real estate down the road if you chose to do so, and it kind of just keeps that door open. So those are kind of the 3 reasons why I think a 30-year mortgage is better than a 25-year. And I know you must be thinking, well, what's the advantage of a 25-year? Why would anyone ever choose a 25-year? The reason is a 25-year amortization typically has a 0.1% lower interest rate. However, that's based on the lender. Not every lender charges a premium to have a 30-year mortgage. So that's why you really need to be working with a mortgage broker that can shop all the different lenders, find one that has a great rate and also doesn't charge any premiums to have this 30-year mortgage. But in most cases, 0.1%, honestly, even if I had to pay that difference, to me, it's worth it to have the added flexibility, the increased borrowing power, and keeping my options open for the future. So I hope this video provided value for you. If so, once again, please hit that subscribe button, like this video, and ring the bell to be notified. It'd mean a lot, and I'll catch you on the next one.